What I want to really go over today, guys, is I want to focus on overall pre-market. Not only focus on overall pre-market, but focus on a pre-market strategy that will lead to success 99% of the time. This overall strategy involves shorting, and what that main short is just shorting top gainers. Shorting stocks that have very nice gap ups. I know a lot of you guys see a nice overall gap up play. Immediately, you guys say to yourself, you know what, this has a great press release. This has a huge gap up. This has a lot of volume. This is a stock we want to be getting into. Not always the case, guys. When you see a stock with a nice overall gap up, this is when we usually get, a lot of activity, but it does not mean we get a lot of runs. So I definitely want to show you guys a lot of examples, but first I want to show you guys some examples of what a good breakout looks like, what a good breakout stock looks like. And a good breakout stock looks like is a stock that really doesn't have too much of a gap up too much at all. The best breakouts are going to kind of be the biggest secrets, if you want to think about it like that. This means they're only having maybe 3, 4, 5% gap ups. They're only having gap ups that are underneath 10%. They still have great press releases. They have nice low floats. They have great chart setups, but at the same time, they're kind of floating underneath the radar. It's not many people are buying and hyping these stocks up in pre-market because, again, when that happens, guys, that's when they crash right at the start of the day. What we want to look for is stocks that have all that, nice hype, that has that good overall press release, but doesn't have the gap up towards it. That's why every single morning when I go through the gap scan, I look through the overall float. So I look at the low float. This is the overall low float on the leader and loser board right now, but I usually do this on the overall pre-market scan because I like to look for low floats, because the low floats, guys, is what makes stocks spike. Again, some of the biggest spikes that we have seen this year so far are stocks such as SPU. SPU has under 1 million in float. HMNY. Back here where it has under 1 million in float. OPTT where it has about 2 million in float. GBR where this stock has about 2 million in float. So again, I always put on the float scanner to see if there's any sort of, even if it's 1, 2, 3% type of activity towards it in pre-market. That's absolutely fine, because that means there's volume towards it still. There's still some eyes watching it, and that's all you need to really get volume going. Again, how do a lot of traders find their overall breakouts? Some of them have high of the day momentum scanners. Some of them use screeners to see what are the current top gainers. But by that time, when you see the stock already a top gainer, it's already too late. So how do you guys find these overall top gainers? To find these overall top gainers, again, when you look at the biggest spikes, a lot of them only have a few little gap ups. Again, as I said, 3, 4, 5%. And these mostly have press releases or setups that basically kind of slipped underneath the radar. So when the market opens now, that's when all the activity comes in. It starts moving up a little bit. People see it on the high of the day momentum scanner, or people see it on their screener start popping up to bring it in volume, and all of a sudden people say, oh wow, you know what, look at this press release, how did I miss this, or how did I miss this chart setup? Now the buying power is going to come in. Now the buying volume is going to come in. Look at GBR on this nice rip. It did have a gap up from 191 up towards around 205, so about a 14-cent gap up. That's very, very subtle. That's maybe about 3, 4, 5% gap up right there, and then it led to a huge rip. HMNY, way back on the start right here, it had, this massive gap up, 109, gapped up towards around 117, 120 maybe. And that's, nothing big whatsoever at all. Maybe a 11-cent gap up, maybe 2% gap up. Good press release, nice big rip. Now, it can continue to move on up because the volume's there. Everyone's, found that press release already. Everyone has already found that chart pattern. But a lot of these gap ups, guys, a lot of these big time rips all start with smaller little gap ups, or, nice little U-shaped patterns that really you have to understand the chart pattern. Little gap up will show that it has, some volume, and that's where these big time rips and big time activity comes in. What I really want to show you guys, though, is the overall fact that if you have too big of a gap up, they're easy shorting indicators. The best example really occurred today, as well as if we look back and we look at the overall play we were staring at this morning, which was PRQR. PRQR, we were basically saying in pre-market, this gap is way too big, guys. Hey, it's up 45%. Great press release towards it. Great press release. It's just, it's overbought already. Basically, if this stock opened up, let's say at 618, it would have ran from 618 all the way up towards 875. But since it already did this in pre-market, since it already did this in pre-market, now it's going to become an absolute big dump. So PRQR already had its run. It already had its run. It had its run in pre-market. Now people are are just selling it. Now shorters are coming in. Now people just want to lock in profit. But if it opened up at the bottom, that's when this whole entire candle would be reversed, and it would move on up. So whenever you see a gap up with a gap of a 40, 30, 40, 50, 60, 100%, immediately, I don't care what the press release is, it lean towards buys on the shorting side. And we have tons of examples, guys, as we showed you guys before. MCUR, huge gap up. This came out with a merger agreement. Mergers are huge. People are saying, great agreement, this thing's gonna run huge. Opens up from 120, opening up at around $3. Then it just comes right back down, falls all the way down to $2, crashes, and everyone says, hey, Dekmar, what's going on? It just came out with a merger agreement. That's a great overall press release. That's huge. That should be ripping. And that is huge. That's why it had a huge gap up. But imagine if you got in at 120 and the stock opened up at $3. What would you do? I'd probably lock in profit. Exactly. So that is why everyone does that. And when it's a universal thing, when people are locking in profits, getting in at 150, getting in at $2, and you're opening up $1 up, and you're up a few $1,000s, a few $100, depending on how how many shares you bought, you're just going to lock in profits and be happy. When you see everyone doing that, that is going to bring in shorters as well. The stock is already overbought. We look for stocks, again, when a stock, if you guys have been trading with us in Power Hour, stocks are sometimes up already 40, 60, 100% already. And I'm saying, you know what, guys, I love, trading, but at the same time, I like trading a lot in the morning, because the overall fact that these stocks didn't have their run yet. The fact is, when a stock is already up 60%, it has lower percentage of running more. When a stock's up 100% already, you have to say, okay, am I chasing now? Because I think that stock already ran a good bulk of what it's already going to run on the day. How much more could it possibly have left? So the fact is, when a stock already opens up 60%, it's kind of like starting already in Power Hour. It's kind of like starting at the end of the day already and saying, you know what, how much more can the stock really run? So we have stocks, such as MCUR, stocks such as JAGX that has already went on some big time massive runs and has already come right back on down. You could see JAGX straight on up, straight back down. Big gap up, big gap down. It's basically like opening up, the morning bell came and it's already like the stock already had its morning rip already. Going through another one, SEED opening up at 233, closing at 233, excuse me, opening up at 320, and then just falling all the way back down to 233. Now, where's the money to be made here? I'm telling you guys not to buy on these stocks, so obviously you short them. You short these plays. They're very, very simple. Anything above 40%, anything above 50%, yeah, we might get a little bit of a morning pop just because there's a little bit of hot momentum, and there's going to be rookies who are saying, yes, positive phase 3 trials, I'm psyched, I'm hopping in on this, and all of a sudden it crashes, and they're saying, what's going on? I thought that was a good press release. And it was a good press release. It already just had its run. So again, when we go back to PRQR, and we see this morning, PRQR this morning again came out with a press release that announces that PRQR meets the primary endpoint in its proof of concept study with its overall patients. So PRQR, great overall press release that it met its primary endpoint. It met its overall goal that it wanted to hit. So why is this crashing? Well, it hit its overall goal. The press release came out. Everyone's pumped about that. It went all the way on up. So right when it opened on up, it already had its run, opening up 45% on the day. That's a pretty solid day, and that's when it's just continuing to come on down. That's when it's continuing to crash. So whenever you see these overall huge gap ups, guys, whenever you see these huge overall big time plays right here on pre-market, they're very simple to just short. So whenever you see this, that's why we have the gap up scanner every day, not only to find the hottest press releases to go long on, but if you see something that's gapping up 40, 50%, yes, it might have a little bit of a morning pop, just like you see right here on this upper shadow, opened up at 850, hit a high of 870, and then just absolutely crashed down towards what is that, 633. So we've fallen over $2 already, $2.27 we have fallen so far. You guys like that math? That was quick. Very simple stuff. I get too much joy out of simple math right there. But other than that, guys, PRQR, a great overall example that happened today, just of a stock having a great press release and gapping up. So the overall fact I really want to stress to your heads, guys, and this, a very simple lesson, is the fact that just because a stock has a lot of volume and a great press release does not mean it's always going to have a rip. If it has too much of a gap up, that's basically the stock opening up later on. It's basically if the stock already had its morning spike and then now is coming back on down. It's gapping up, 45%. 5% opening up that high in the day. What we want to look for, again, for these big time rips, what we want to look for are the 2-3% gap ups that have good news that kind of went underneath the radar. You know, the 2-3% gap ups that have little gap ups from 196 up towards 205 that are coming up on the pre-market scanner that's saying, hey, you know what, we have a 5% gap up, nothing huge, but hey, we have low float and we also have a 5% gap up. That means the attention is there. That means, you know, there's that kind of other couple groups that are like, hey, we're gonna absolutely kill this right here, and we're just, you know, giggling, having a good ass time, you know, about to, you know, really enjoy this big rip. And this is what really starts coming on in, and then it pops up on high the day momentum. Everyone's saying, oh wow, look at this, GBR starting to come on in really hot, and then everyone starts buying, and we're all the way at the bottom, and that's when we're getting these nice big rips and these nice big pops. So that's what I really want you to stress to you guys, that that's what it's really all about.